So let's let everybody into the meeting. Good afternoon, everybody, or good morning, depending where you're from.
Yeah, hello all. Thank you for joining.
We are excited today to talk a lot about remote real estate investing. This is I think this is the one that we were most excited about, Paul, after all the talking points we went back and forth on. For those of you guys that have been following us along in our series, this is our 6th webinar together with Express Capital Financing and Hubzu, or Altisource. It's been a really fun ride, got a lot of different education points out there. I hope you guys have been utilizing this in your business and helping yourself growing more often.
Yeah, this has been really fun, and we decided to have a little fun with this webinar. I think that it's timely. Remote investing, real estate in general, with interest rates higher and maybe inventory lower, it's become a little more localized. However, you may be in the wrong locale, and so we decided to do two things with this webinar. One, it's a timely topic. Remote investing. You may find yourself living in a place where the opportunities are not present today. And how do you comb for and find and identify properties, at a distance? And even if you do find the right property, how do you monetize it? Also, we thought we would test out a little AI. And so Max and I got together and asked some key questions and came up with some essentially bullet points that are worth talking about. We didn't just hand it over to ChatGPT, but we were impressed with the suggestions that kind of came back our way. Some we nixed, and we decided to use it as kind of a skeletal framework for building this out. And I think that that will be useful also in building out your team, building out your resources to launch a campaign that allows for remote investing. So with that said, I think we get started, Max.
Absolutely. And we're going to talk a lot about the different technologies that are out there nowadays to help real estate investors with this. So we're excited to talk about it. So I guess really let's the topic of the day, if you haven't seen it already or you haven't heard us yet, if you just joined, we're talking about remote real estate investing, right? So what is remote real estate investing? Why is it so important today? And why are people looking outside of their backyards right now? Is remote real estate investing for everybody? Maybe not, right? So it depends on like Paul was just saying earlier, right? It depends on where you are, right? If you're in a market today that gives all of your goals, right? Your investment goals are met with your market. Well, there's no need to really go outside of your market, right? Now, what we said earlier was, hey, a lot of people now are in markets where it used to be kind of exactly what they were looking for, but today maybe that changed, right? So much. I mean, since 2020, I feel like the world has changed in so many different ways, between investment strategies, between what's available out there, where people are living, what buyers are looking for, where people want to rent their homes, right? So things may have changed for you, and maybe you're not finding the right deals, or maybe there just aren't enough homes in your market.
It's true.
So
There have been hot markets that have gone cold in the last 2 years, and so price appreciation ran up, and maybe I'm thinking of Austin. I live in Texas, and so that was a great area for a little while, and Boise, Idaho was too. And maybe if you lived in that spot, all of your dreams were answered. However, maybe that's shifted now, and so and you still like real estate investing. So what do you do about it? And there are migration trends, and people are moving to tax advantage states, and there are certain states that are better from a landlord perspective, where if you're planning to build a portfolio, you can actually evict in a timely manner so that it's not disruptive with your business. But we're going to get into all of that, and I guess we probably start with, how would you even find a good deal? Don't you think, Max?
I absolutely agree. So Paul, tell us, where would be the first place somebody would look if they did want to source properties from outside of their local area?
And so I'm going to share my backyard and what I know. I work at Altisource. We've got 12 companies. And I don't want this to be an infomercial. I want it to be more educational, but I will share where I have experience. And so we have a platform, and there are other platforms, but I'm biased. But Hubzu is a fantastic platform for finding good deals, both default real estate, REOs, foreclosures, but also off-market properties. And so let me just pull up a screen. It's just a good starting point. And it's an auction platform. We run a series of 7-day marketing phases where the highest and best wins. And so but the good news is in that time frame, 7 days gives you a lot of time to do your homework and vet the deal. So let's pick a state, Max.
So yeah, I mean, you mentioned, well, actually, let's go to one of the resources that we were talking about earlier, right? So while we were on the call, we said, well, we use ChatGPT in order to help us kind of create a framework of how we wanted to run things, right? So what I did was I actually put in another prompt today and I said, hey, look, if I was interested in cash flowing properties, what are some markets that I would look at? Now, I'm going to just preface this with some clear information, right? We're not taking what ChatGPT gives us for face value, right? That's not the purpose of this. The purpose is to give you a starting point. The purpose is to give you somewhere to start your homework, where you may want to look. And it's going to scrape all these websites. So it's going to get the good ones. It's going to get the bad ones, right? We want to now take this information and look through it. So let's take the first one that it gave us and see how we would look there. So the first one was Cleveland, Ohio. I know I'm seeing a lot more deals in Ohio, so that does make sense to me to hear that.
Well, are you seeing my screen showing Florida, Max?
Yes, I am.
Okay, so I'm not seeing Cleveland.
Oh, no, I was talking about the ChatGPT thing I did, but we can do
okay. Yeah,
no
and
worries.
to echo Max's point, what we realize is at this point it is a man and a machine. With ChatGPT, it can be garbage in, garbage out. It's just the internet is not a source of truth, but it can be. But I think that assembling a team is quite critical to making sure that you have a little more expertise behind you. And so it's a good starting point. So anyway, Hubzu is a great place to find a property. And I don't need to really spend time on each how to go about searching it, but there's a lot of information in here. Max, I'm going to switch over to Rent Range, and Nest Range is just some technology tools that you can use to make a determination of value. But we have two other companies. One produces a rental AVM. It's called Rent Range, and the other is produces a valuation AVM called Nest Range. They're sister companies, but these are great.
It sounds like what just to echo what Paul's saying, which is once you find your starting point, right? Now there's a few things that have to happen, right? We can't just say, well, I want to look in Cleveland, Ohio, right? I kind of went and jumped the gun a little bit there to kind of just give you guys a little bit of a preface to what I was doing, just to give us the picture of how we could source some of those properties, right? And Hubzu is a phenomenal place to go ahead and find that. And there's other sources as well, but this just happens to be one where you can find auction properties where there will be some meat on the bones where you can make a decent amount of profits, right? Now, when you're deciding on the market that you're looking at, it's kind of the same conversation that I'm going to have with you. If someone comes to me and says, hey, Maxwell, I want to, find a place to invest and I want to do it remotely, where should I look? Well, if I just threw a city or state out at you, I wouldn't be doing you any service, because is that location going to accomplish your investment goals, right? So I believe that the first thing that needs to happen is to understand, hey, what is our strategy? How are we what is my goal here, right? Is my goal to be a flipper? Is my goal to buy 1 to 4 unit investment properties that are going to get, produce a decent amount of cash flow? Am I bigger and I'm looking for the multifamily assets that are 50 doors plus? Where am I and what am I looking for is the first thing that needs to be understood. The next thing that we need to understand, I think, is our exit strategy, right? So how am I going to exit my property, whether it's with a sale, whether it's with a refinance, or maybe I don't want to exit. I really just want to hold it for the long term, right? And I'm not playing a game of which market's best today, but I'm playing a game of which market do I feel is the strongest and is going to provide the most opportunity in the 10, 20, 30-year range, right? So these are the questions that we first have to ask ourselves. And once we have those answers, once we know what we're looking for, I think now it's when you start to plug into all these technologies that Paul's about to go into with that Altasource provides, where rent range. Hey, if I care about the rents in that market, where am I going to find that information, right? How am I going to source what rents actually look like? And Paul, if you don't mind sharing with us a little bit about what we're looking at over here.
Yeah, so I think that back to the big picture, remote investing is going to require a kind of a multiple set of underwritings, in that the deal needs to make sense, whether or not you plan to fix and flip it or hold it in your portfolio as a rental property. And so it's just be conservative to make sure that the property you're purchasing represents a good investment in a couple of different ways. So this screen that I'm sharing is specific to a particular property, but it's a property report that we produce on Rent Range, and it ultimately does provide a rental estimate with a confidence score, which is it's an AVM, automated valuation model, and that's great. It pulls in big data from 30 plus different public proprietary and government sources to assess what type of rental property it would make and the type estimates for rents the investor would receive. But it also, I think this is very critical when you're looking at a specific property in a bigger macro sense, what's happening in that geographical area. And so this is quite helpful in, what's happening with a 2-bedroom or a 3-bedroom or a 4-bedroom. Just kind of get a bigger picture, higher, elevated view of the landscape that's surrounding this particular property. And I don't want to dive in at the property level. I don't think that makes sense here. But it's a tool and produces a data point, and I think that's critical. But then I also I can switch over to our valuation AVM. You need to have some assessment of what that property is worth before you even begin to make an offer. If you know that the property is going to need work, factor that in. And if you know that the property on its best day sells for X, why do you think that you're going to make money on that deal? So I'd be very conservative. Trade location, your entry point is critical. People always say it. They say real estate's local. We'll get the right location, but also you make your money on the buy. And it's not completely true. You do make your money on the sell too. But make sure that you enter at the right price, because then it can create new headaches, and you simply don't want to face those.
Yeah, you got to buy low, sell high, right? So that's the name of the game, and real estate speaks for that. But on top of that, again, it's extremely important to understand the trends of the market, where things are going. When did things start to increase, right? Because maybe a market that was increasing in a downward market, but in a upward market, it doesn't do as well, right? We've seen that in some remote locations during 2020, right? A lot of these remote locations started to increase in values. Today, they've stabilized, right? Which is really interesting, right? A lot of again, every market across the map is kind of operating a little bit different from each other. But the one thing that I would say that's pretty consistent is that property values haven't dropped, right? And even though rates have gone up so high, and there's a reason for that. Some could say it's based on the inflation and just value of money may have gone down and that keeping it up, or the fact that we have a much lower amount of homes that are available to people and a much higher demand of people that want and need homes, right? So all of this plays a part in our economy and how it affects our values and how we're going to go ahead and purchase them, right? Again, rates are high. So how is my property going to cash flow? Can I afford the price of this property? Like Paul said, if I have to buy it for 450, but my rents are only 2,500, is that going to support that property? Or am I not hedging my bet properly here? Maybe I do need to look at a better rental property market to find those assets that will hold itself.
Yeah. So Max,
So
I've pulled up our valuation AVM, and I think this is a good tool for people. One, at its basic level, it's free. So you can order the most simple, what is it worth with a confidence score. It doesn't produce a report with a lot of the detail that in my mind is necessary if you become interested in a property. But for a few bucks, if you kind of want to dive deeper on a specific property, it really does allow you to look at the valuation trends in an area and how long properties sit on the market. And as Max said, supply's tight. And in some parts of the country with migration trends, it's getting tighter. So if you're in one of these states where people are moving, or a city that people are moving to, um, that's really relevant in terms of the flipping game or the rental game. So I would always encourage to have the wind at your back, in terms of price appreciation, rental appreciation.
absolutely. And again, like we said, all these technologies, all these tools that we're sharing with you, we want you to take them the same way, right? It's where this is giving you information for you to then take in and decide for what makes sense. Where do you feel the market is? How does this impact you? And what is the information that you're finding when you do your own little research, right? Use it as a starting point to help you. Technology is a really awesome tool for us, but at the same time, it's not there yet where it can do all the work for us yet, right? We still got to put in those efforts and use our brain a little bit, because the brain is our most powerful technology that we have, and I implore all of you guys to use it as much as possible.
And your
Right?
gut. If your gut
Yes,
doesn't say it's right, then don't do it. I always believe you've got to have both aligned.
I'm with that. So talking about technology, I mean, there's so many other things that we need to talk about, right? Because if I were to go ahead and want to invest in another state, right? I guess the first thing that would stress me out and say, well, hey, do I have the resources to do this, is do I have the right team together, right? Do I have the realtors? Do I have the contractors? Do I have a property manager? Do I have a project manager, right? That can handle my project and take it from start to finish. The right attorneys, right? Suppliers for goods, and making sure that I have the right tools and equipment for my contractors. What about inspectors, right? To make sure that the property I'm buying is actually the same shape that I'm told that it's in. So there's a dream team that needs to be built here. And this is not going to happen overnight, right? We need to put in the time and effort to build that team. But there's a lot of resources that we have at our fingertips, right? That we can utilize to make sure that we are getting the right team together. So I
Yeah.
know at Altasaurus, you guys also have some more tools that are available, right? So for example, and some of them might be for the bigger investors. When I say bigger, I mean they maybe are enterprise level, where they're acquiring many doors over the
Right.
amount of time. Some of them might be for the everyday investors, the mom and pops that they're looking for one or two properties. So let's talk about that, right? I guess the first thing that everyone is usually trying to find is potentially their contractor, right? Hey, if I'm a fix and flipper, the first thing that I might want to look at is, hey, how am I going to get the work done? How am I going to ensure that that actually happens properly? I guess, Paul, do you mind telling us a little bit of what tools are
Sure.
available?
So we have a great deal of experience with contractors, and specifically through our construction risk management group, which is called Granite, which has been around for 29 years. And so one of the offerings is contractor reviews. And so we have a database of essentially all contractors, and have insight into which contractors make the best partners, or present the most compelling business opportunities for you. And so we don't offer that information out, but we have a 50 state renovation solution. And one of the companies that we use to identify the right contractor in a specific location is granite. And so we have, we're in 50 states plus the territories, and DC. And so we also leverage Vendorly, which is our vendor risk management company that essentially buckets and risk weights 80 to 100,000 real estate vendors, which covers a lot of the universe. But one doesn't have to, one's going to have to do, that is kind of a business to business enterprise level solution. However, you can do a lot of that vetting on your own, looking at, the Better Business Bureau or Yelp or Craigslist, as we're talking about earlier. But there are ways of finding out who are the right partners here. But I would say that the solution that we have in renovation is quite good at the smallest level to also large scale projects. And so we're choosing the best contractors right out of the gates for these projects.
For sure. And let's not forget our, one of my favorite ways also of sourcing people, especially like your realtors and project and property managers, is networking, right? Find ways to, and guys, there's webinars all over the place. I'm a part and join webinars where realtors are sharing their information about what's going on in their market, where they bring on title companies to explain how title works. Maybe they're bringing on a property manager, right? There's so many ways that you guys can network in person and through webinars just like this, where you can meet people that'll help you build that team, right?
Yep.
One of my favorite ways, actually, like when it comes to the one person that usually has most of the resources put together, is going to be your realtor. Everyone usually is going ahead and marketing to the realtor because they know that usually that's where people start. When someone's trying to buy a home or anything of that nature, they might be the first person they call. So a lot of the times I try to find a really good realtor first. And the way that I would go about that is I would actually go online and say, okay, who do I see is either the listing agent or buyer's agent on most properties in this specific territory. And when you do that, you could then find 3 or 4 people where you would then go ahead and reach out to them and say, well, hey, I noticed that you had a listing on 123 Main Street, and I've noticed that your name's showing up a few times. I'm curious, I'm looking to invest in this market. Can you give me some information so that I can use you and even the resources that you have, right? These are many ways that all this information is at your fingertips. You don't have to leave your home to do it. Again, if you have the dollars and the time to travel and go out there and meet them, I highly suggest that, right? Again, sometimes people are like, well, it's going to cost me and things like that. Well, hey, are you investing today and are you making anything with it? If the answer is no, well, if you cost you an extra $5,000 to do that deal, and now you were able to do it and you made 45 instead of $50,000, that's still $45,000 more than zero, right? And if that structure, or maybe you could invest in your market, but it's like, hey, I don't want to hold the properties because then I'm going to be cash poor. And if I'm cash poor, I can't get my next deal. So my opportunity cost is getting eaten up. Well, hey, that's a reason that you may need to look outside your region. Now, is it always across the country? No, right? So I live in New York, right? And I would say that New Jersey would be a phenomenal market for a fix and flipper. We're still seeing deals there all the time. As a lender, I'm funding those deals. So I know that there's properties in that area. I'm not even doing market research right now. I'm just speaking from my personal experience. That's only an hour drive away, depending on where in Jersey we're talking, right? But at the same time, that is a really good option for me because if emergency happens, I know I can drive down there and get there. I know that
Yeah.
I can go and do what I have to do. Now, if I was investing, let's say with Paul in Texas, maybe I would say, hey, Paul, let's find a really good project manager that I could trust, that I could talk to and FaceTime, and he could show me the property and tell me what's going on with it. Hey, well, that's a really solid solution. If it's somebody that's coming from a referral that you know and trust, I would feel comfortable with that, right? So understanding, who and what, where, and when is going to be super important in choosing who you're choosing for the team that you're putting together.
And there's aligned interest when you're reaching out to an unknown realtor in a specific market. If they understand that there's a possibility of getting the listing on the backside because you're flipping the property, they're going to probably get you in touch with the right folks that can help you complete your project so that they can actually do their own job. Or a project, if you're asking for a project manager in that area, or property manager even, many of them can, help you build out your team in that location. And these should be, variable cost team members rather than, hiring them and keeping them on your payroll to some degree. So, keep your costs low and tack it to the opportunity.
Absolutely. And just talking, property managers, like if anyone is here looking at buying cash flow properties, I would say that's definitely a big starting point, right? They may even be able, a lot of times also property managers, they know people that they are currently working with that are selling property sometimes. So they would want to keep that in their family, right? So they'll be able to share that with you and say, hey, by the way, this person's selling property A, B, and C. Are you interested in them? That's number one. And number two is, guess what? If there is an emergency, if there is something that goes wrong, the toilets flood or anything like that, you don't have to run down there, right? There are ways to manage these properties, and the amount of technology that's out there nowadays where I was actually at a conference the other day and I met with this really cool, I haven't really spoken to them that in depth yet where I got a chance to understand the platform that high level. I plan to, but what they do is it is a self property management system that is operated through a software. So for example, if there is a toilet that goes off and I go on and either the tenant or myself goes onto the portal, it'll then connect me with 5 people in that area that can assist me with this at that time, give me an idea of what that bid looks like and pass it out, right? There's so many different ways that you can manage that property without needing to be in that same state or street.
That's good advice.
Yeah, I mean, just take a peek around. I mean, the internet is a really cool place. Definitely don't get lost in it. It could definitely take you down some roads, but at the same time, verify what you're seeing, understand, have conversations with the people that you're talking with, legitimize them, see if anyone you know is using them. Again, that's my personal piece of advice.
And Max and I both have clients that actually only remote invest and are looking at properties at a distance. And one client, I'll share a story, had a property that came up in his backyard and he refused to go look at the property simply because his business model doesn't suggest don't look at the property. And so anyway, but they're very successful at this. They know what they're looking for. They have an established buy box and a formula that they follow. And typically it's a very consistent formula, largely involves buying low, as Max suggested, controlling the entry point. And then also time is money. These cannot be projects that are going to, sit on the books for long. You're probably not going to be as successful if you have to undergo a major overhaul. The lighter the lift, the more quickly you can get your money back and move on to the next deal.
For sure. So, Paul, there was another thing that we were discussing when it came to finding the right market that you wanted, let's say, to invest in, right? And we were talking about understanding the demographics better. What were some of the points that you brought up that you felt were super important to understand when looking at a market?
So this is information that anyone can access on the internet, but I would look at migration trends, okay, or business movement. Where I know I live in Dallas, and I think I heard on the radio or somewhere or read in the last day that a certain number of companies had moved to Dallas, major companies in the last year. And it was really an impressive number. And so I know people are moving here because those companies have relocated. So here we are. It's one city, but it's growing quickly. And, if they keep the construction trends up, Dallas will be in Oklahoma and eventually. I mean, I'm kidding, but truly we are going in that direction, and many companies are moving to North Dallas, and so it's expanded, and they're building cities like it's like it at a very high clip, and they're nice too. It's really impressive, and so it's not. It's more of a new construction opportunity. A cornfield turns into a suburb, but it's working. And
Yeah.
so that's just an example. Good knowledge, good to know. But it's also important to know what's happening at the state level. Are people coming in? Are they leaving? And I'll say that Tennessee, Florida, Texas, these are tax advantaged states without federal income tax. Wyoming has that, but that same kind of tax offering. However, Wyoming's only got 500,000 people. So if you're flipping properties, Wyoming's going to be more challenging. You're usually going to do better flipping a property where the city alone is larger than 500,000 people. That, keep that in mind. That's where your liquidity will come in to play. And so you might find yourself in Florida, and it may sound like it's a great deal, but it's off the beaten path. It's Central Florida somewhere, and it's not necessarily where people are moving. So pay attention to what's happening economically, from a tax perspective, migration. Are there what's going on with the universities? I mentioned to Max that I live by a university, so if I was looking to buy a rental property, I'm thinking students. Who are going to rent it? It's going to be a student, and in all likelihood, are a few students. And if the city has its way, it's not going to be more than 2 students in one place. So, but all those rules, and sometimes you find 6 students living together. But really think about this. This is going to affect your ability to recapture your money and get and do it, rinse and do it again.
Absolutely. And like you said, it's all about all the information you could collect, the demographics, the demand, the how many people are moving there, which companies are locating there. It's understand that market, who's living there, right? Am I going to cater to the right person? Speaking about that, I was talking with an investor, and we were at the Bigger Pockets convention, which was, by the way, phenomenal. For anyone that's interested in joining, I highly recommend it. And he was telling me about his investment. Now, he was like a perfectionist, right? Where it's like, if the roof wasn't to the T in the right way it was supposed to be, and everything was painted clean and a perfect home, he wasn't happy. And he started telling me that, well, I'm having trouble now because I can't get a buyer for my property because my value's too high. I need to sell it for too high because I put so much money into it to make it perfect. And what we realized is we took some time, we looked into the market together, and we sat down and we said, well, hey, let's look at who's actually buying in your market, right? What are they buying? And when we looked at properties, we realized, hey, look, there isn't that significant of an increase on properties where the details were at the highest level to ones that were at a, not that high of a level. It was beautiful property still, it was livable, but maybe this one was a little bit nicer, right? And we didn't see such a big increase. And what we noticed when we looked at that was, hey, people in this market are not so concerned about that. They were more concerned about having the right location or having the right a space for their property to live in. Those were some of the bigger things that changed a property in the market, right? And when you were showing us actually the report earlier with the rent range, right? I loved how the comparables actually showed that way, where you could actually identify a pattern and say, whoa, 1 second, I'm noticing that square footage is all over the place. That's not a big factor here. But I noticed that this cluster down here on the map versus that cluster up here on the map, these got more money for it, right? So
Yeah.
you'll start to notice what is important to the buyers, right? The data speaks for itself, right? You can really see a lot of that information when you're looking at these reports, spending time just reviewing the market, whether, whichever websites you're looking at. I'm sure you'll be able to identify some sort of pattern to help you understand, what do people in this market care about? What are they paying more for? What is not as important to them? And making those decisions, right? Because if you know your people, um, I'll give you guys a funny thing that I tell a lot of my loan officers, actually. One of my guys came in and he started telling me about this guy that he knew that can sell ice to an Eskimo. And I started to think about that for a minute. I'm like, you know what? I said he could keep selling ice to that Eskimo. I would rather sell ice to the devil, or I would rather sell fire to the Eskimo, right? Why? Because that's what they need. That's what they're going to pay me more for. I don't want to just sell them something just to sell it. No, I want to provide that value. I want to create the highest amount of value that I can bring to that person, right? So bring the Eskimo fire and you will get paid more for it. You will see that your profits will increase and you'll see that you're going to be doing better off, right? Understand your demographics, bring the people what they want, right? Don't go ahead and start over improving your properties. And you know what we did after that, Paul? Right after we had that conversation, we looked a little bit outside that market and he realized that a half hour away, there was another market that was a little bit more luxurious and people liked the little finishes and it
Sure.
was more his personal type of deal, something that he would enjoy working on. And now we're working on a deal there that he's looking to make a decent amount of profits on, right? So do the research, understand your market. You'll see it'll pay off so much more in the long run, and you'll feel better about it.
Yeah. And then there's a lot of kind of more granular decisions that get made about the grade of materials that you'll use and the choice of colors, and study that a little bit. I mean, I I know from personal experience, you use a light color and then it makes the house seem bigger. You use a dark color, it makes the house seem smaller. Little things matter. And you can spend a lot of money on things people don't care about real quickly. And so it can, where will you get a return, and where will you, where does a dollar grow or where does a dollar shrink? And really factor that in. There are pros that have got this down to a science, and maybe that's, don't reinvent the wheel on that one.
100%. Trend setting is hard. Once you get big enough, you could start to work on that. But in the meantime, we want to follow the trends and we want to ride the wave up, right? I guess the next topic that we should probably cover is lending, right? Because there are some differences when you are borrowing money, right? So if I'm looking to invest in another place, and let's talk about that for a minute. So let's talk about on the fix and flip side where things are more common sense based, right? It's more about how is the lender going to look at this? Are they going to approve my loan? What do we care about? Now, we do ask that question, right? Do you live in the state, right? Why do we ask that? Because there are things that you might not be familiar with, which we're going to go into in a little bit deeper, right? Like such as legal, what are the eviction laws, things like that. How does the Department of Buildings work in that sector? You want to make sure that you understand that. So we understand that, hey, you might have a little bit of a learning curve if if I live in New York, but now I decide to invest in California. I might not know how those laws work. I might not be as familiar with them as I am in my backyard, right? So where it comes in is what we look at it as lenders is, hey, have you invested in that place before? So I'll give you, I guess, a little bit of an example from an actual borrower that I'm dealing with who is from Pennsylvania. We have done many deals together in Pennsylvania and New Jersey, and now he moved to Texas, right? And he's living there now, and he's looking for a deal, and he reached out to me the other day about it. So in his scenario, because he now lives in Texas, if he brought me a deal from Texas, we're going to still keep all our same terms. Why? Because we know that he has boots on the ground. Yes, there might be a little bit of information that he might not be as caught up on, but working with professionals, he's going to make sure that that actually operates well and be able to complete his transaction in the simplest way, knowing that, hey, he's gonna be able to get the construction done, right? This is a fix and flip. So that's our biggest concern. Can you get the work done? Now, if he still lived in New Jersey, Pennsylvania, let's say, and he wanted to do a deal in Texas, well, we might, let's say, scale back a little bit of that leverage. We would still do the deal for sure if it made sense, but we might scale it back to allow him for that little bit of room for error. We don't want to put him in a tight spot where if it takes a little bit longer, because he didn't know that he had to apply for a certain permit or however the case may be, we want to make sure that he's going to get through this deal okay. So when it comes to the bridge side or the fix and flip side, the hard money, we have a lot of different names for it, right? It's actually one of the easiest types of loans to get, so it's not really that hard. It's actually soft or easy. But there's many different, it's a very common sense approach, and it's important that we take that approach. So knowing how far you are from the property, have you invested there before? If you've done many deals in that area before, well, we shouldn't have any issues because you're familiar with the territory. We've seen you come through with it before, right? So you're not going to get a full scale back when it comes to leverage, except for if it seems a little bit more difficult than normal for you. So keeping that in mind is important. Now, when it comes to permanent financing, which is I'm buying a property for cash flow. A lot of you guys might know it as DSCR loan, right? The debt service coverage ratio or coverage loan, mortgage, sorry. When it comes to those properties, it's actually a lot simpler, right? We're not going to go and pick, oh, you're not here, oh, but you're here, you know, how far are you from the property? Those are not things that we're really looking at. What we're looking at there is, does the property make sense? Does it cover itself? And from there, it's actually a lot easier, right? So understanding the differences of the two and how that might affect your next deal, I think is important for you guys to understand so that you can utilize the right information when you are underwriting your next deal, right? Hey, how much money do I need for it? Well, keep that in mind. Maybe you should reach out to your loan officer and let them know in advance. Hey, I know that we've done deals in Ohio before, but I'm actually now looking to invest in Florida, right? What does that look like for me? Is there anything that I should expect to change? Have that conversation, be prepared for it, and just make sure that you're doing what makes the most sense for the deal.
Also, having a private money lender behind you allows you to make a cash offer, which is far more compelling. And I've done both types of offers, you know, quite a few times, and I can tell you the response is can be striking. So anyway, it's a helpful thing to have, you know, when you're building out your team, put yourself in a strong-handed position. And I think that being able to make a cash offer, even if it isn't your long-term plan, you know, it really does assist. It gets people's attention.
Absolutely does. So I guess the next thing that we had on our topics to talk about, Paul, was risk management, right? What are some, you know, some things that we could do to prevent certain things from happening? I guess what are some strategies that we could use, or what are some of even the risks? Let's talk about that first. What are some of the risks maybe that uh, a buyer or investor may incur when they're dealing with a remote property?
I'd say that a few risks, there's so many risks, okay? And you want to, and it's always the one you don't see coming. Um, and then but I think that there are many things you can do in a proactive way to mitigate risk, to make it smaller going in. One, we talked a little bit about the entry point. Okay, you can make some mistakes if your entry point's good. Two, you recognize that your primary intention may be game plan A. You're gonna flip this property and do so quickly, and you know that you have everything lined up because and then you find yourself, for one reason or another, having a longer time frame hold. And so having a buffer of cash to get you through you know, an unanticipated hold is essential. If you're not going to get your money back, what's it going to look like? And you know, what's your financial picture going to look like 6 months from now or a year from now, as you now have entered the phase of unintended landlord? And will that property produce rents that are compelling? And so I use this as an example. I'm not trying to frighten anybody, but there was a time in Japan in the 90s when real estate essentially truly did crash. And you know, it's not in our country, and it seems like it was a long time ago. But those that were able to underwrite rent going in survived, and those that didn't underwrite rent did not survive that the price crash. So it's not something to overlook. You know, it doesn't matter if you've done 1,000 for 1,000 flips. Always be looking at the rental prospects, because that really is a backup plan. And if you can cover the risk on that one, you're going to probably be good. And I would say that many were surprised during COVID to find out that they had tenants that weren't going to pay, and that was life. So where are you going? Again, you're not, you know that you're not going to be a landlord, but then you find out you're a landlord, and then you find out you're a landlord in a state that doesn't allow for eviction. And so suddenly it's like the last thing you anticipated happening to you is exactly what's happening to you. So I'd say walk it through. in terms of how long you could hold this property. What's your cushion look like? And then, also don't get fancy with interest rates. You'll read everywhere somebody will say interest rates are going to drop. Max heard for a year that interest rates were going to drop. And what did interest rates do? They went up. Now they've dropped actually a little bit lately, but if we were waiting for lately, we waited a year. And it was always rolled out when the next time was that Powell was going to cut interest rates. He was never cutting interest rates. It wasn't happening. And so typically you start to see other time signs of stress before you get interest rate cuts. So I always personally look at where the two-year note is, and that's just a personal thought. But if you were to map out changes in the Fed funds policy by tracking the 2-year note, go on CNBC, you can pull it up. It'll tell you exactly where that is. I've had good luck anticipating interest rate trends by just saying the Fed funds is going where the 2-year note is. Wherever the 2-year note is, that's where the Fed funds is going. And just that is very helpful. And it will work out better for you to do it that way than listen to any expert, because I don't think that I've seen an expert that's better than that. And so that's just a little tidbit that I've observed. Hope it helps.
You brought out something that it's funny. Me and my brother were talking about the other day, and we were saying like, hey, who is the best investor in the market, right? Is it the guy that's doing 150 homes a year? Is it the guy that's doing 10 to 20? Where's the ideal place? What do we like the most, right? And we like to look at these stuff as lenders, right? Understanding our risks, right? And I find this conversation helpful because there was something you said, Paul, which was like, hey, if I'm doing this consistently and I'm having really good success, right? And I'm going and I'm going, and all of a sudden my wheels keep spinning faster and faster and faster and faster and faster because I'm doing so well. I stop to look sometimes at some of the things that are happening around me because it's become so fluid to me, right? And what we found was actually is that, hey, the 10 to 20 unit investors are actually some of the better ones because they have enough experience to understand what could happen in the market. They've seen certain things happen, but yet their eyes are still always open. They're still watching, right? It's like the drivers, right? Am I the best driver when I'm old and I'm driving for 50 years? Maybe not, right? Because I became so used to it. Whereas a student driver might be too cautious, right?
Yeah.
So it's finding that perfect middle ground, actually. So I guess my advice is, and by the way, this is not to say that the big investors are bad, right? It just means
Nope.
that no matter how big you get and no matter how fast your wheels are turning, keep your eyes keep on the market. Make sure you know what's happening around you. Don't fall into oh, it worked 150 times, I'm just going to do it again type of scenario, right? Make sure you're understanding the market. Keep your eyes open, right? This is risk management. The more we build, the bigger we get, the harder we can fall, right? So make sure that after a certain point in your career, you've built enough out of it. Now you're looking to protect what you've built, right? You got to start to put up walls, make sure that you're secure, make sure that your investments are not going to go anywhere, but continue to grow, continue to grow.
Yep. And then another risk management point, and this is kind of it's a silly comment, but Max and I have a mutual friend that says frequently in real estate business, one house as an investment is a lot of houses. So I like the line because I think it captures it well. I mean, a house, it's a big investment. Stocks don't cost hundreds of thousands of dollars typically, and so it's one thing to go buy an expensive stock and it's $300, for one share, but you buy a $300,000 house, it's a lot of houses. So keep that in mind when in your risk management, that even though it's a single event, it's one item, there's a lot of concentration surrounding owning something that may be disproportionately large in relation to your overall portfolio or financial picture. So there's nothing small about owning a house as an investment property. And yet there's a lot of wealth statistics to suggest that for most of us, most people, that's where their money is. Wealth is in the house. And so and really the story is true. housing has been a wealth generator for most people. And so one house is a lot of houses, and keep that in mind, and don't lose sight of the fact if you're playing a numbers game, oh, I'm here, 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 and here, and then you find that you're underwater everywhere. So one house is a lot of houses.
Absolutely. So I guess at that point there were, as far as the risk management, there was a few other things that we wanted to talk about, which we kind of touched on a little bit already, which was like, hey, what are the legalities of owning real estate in that territory? What does it look like? How can I evict? How long will it take me to evict a tenant if I have to? What do standard leases look like, right? What is written in there? So part of the dream team that we talked about was having an attorney on your team, right? Make sure that you link up and you understand these things, right? That's, for some people, they don't like to invest in New York for some of those reasons, right? It's really hard to evict tenants, and they don't have the liquidity, let's say, to hold on to that asset if they're not getting rents and things like that. So they don't want to take those risks. They might look at an easier state. Sometimes people actually say, no, I actually like New York because it allows me to do A, B, C, and D. Maybe they're working with program tenants and things like that. There's many reasons why people like and don't like certain places that they invest, but making sure that you understand the legalities behind it, how to navigate that market, what is typical to happen. Do I have to pay the realtor here? Maybe I'm in a market where it's actually typical for the renter to pay the realtor, right? Understand all these little differences and that can come up within your market, I think is also another really good way to manage your risk and know what you're getting involved in. What are
And
the ethics in this community? Go ahead.
and Max, you mentioned having an attorney on your team, and
Mhm.
I'll say this from personal experience: the first thing that's going to happen if something goes wrong with your project is the contractor and you pull out the contract, what was signed, and so um, you don't want to find out at that phase what did you sign. You want to find out beforehand, and so having it's a wise investment to have that contract reviewed to make sure that your interests are protected, because typically the contractor is going to hand you the contract. You know, they're going to hand you
Absolutely.
something to sign. You're not handing the contractor something to sign. So if you think about right there, it's not a level playing field. So a good red pen can go a long way to protecting you if something goes wrong.
I can't tell you how important it is not just to A, review it, but B, have something actually in writing. The
Yeah.
contract will overrule everything, right? It makes sure that anything you do, especially in real estate, right? What if this is not legal advice, please, guys? We're not attorneys here. We're just
No.
people that are in the industry that have experience that can talk to you about it. But when it comes to real estate, everything should be in writing. Any transaction that you're doing, you should have it in writing. Make sure everyone's on the same page. I know what you're providing, you know what I'm providing, and we're going to have a very good relationship that way.
Yep.
If you leave it into the he said, she said, you never know how that's going to go. You never know how the court's going to say something about it. So be safe, put everything in writing, be smart about it, and have an attorney on your team that could advise you on these things, right? Don't listen to Max and Paul about legal advice. Listen to your attorney. They're going to know what's best for you.
And then also, organization on your part. Each house is going to have a lot of communication surrounding it, and it just will. There's going to be emails, phone calls, etc. If you track that, even if it's kind of done in a skeletal fashion, just to be able to access it if necessary, have files, folders. It's just good idea. Just and then hold on to it for a little while.
Absolutely. Well, Paul, I think we covered a lot of, the topics and even got it a little bit deeper than we expected, which I'm super happy about and grateful to be able to bring this to our viewers and educate them and help them invest in real estate. If any one of our viewers, by the way, right now has a question that they'd like to ask or get some more clarity on, please feel free. We'd love to open up a moment for some
Yeah.
question and answer. This would be a great time. You could use the question and answer box at the bottom of the Zoom screen, or you could use the chat screen. We'll try to monitor both of them. But if anyone has anything they want to add, even maybe it was an experience that they went through, feel free to put it in there for us.
Here, I see.
We got Rakesh who raised his hand. Let's see if we
Yeah.
can allow him to talk. Let's bring him in.
Awesome.
Rakesh, how are you
Hey,
today?
Rakesh.
Hey, I'm good. Thanks for this information. By the way, your chat is disabled, so I was not able to chat. So I thought, let me speak.
Okay, good.
Oh
Thank you
man,
for
thanks for
coming
letting me
in.
know that.
Uh, okay, so I'm based in New Jersey, and then yeah, basically looking to. So, what is your fix and flip or any buy and hold? So, what is your investment criteria? Like, what advice do you give for someone who is looking for, like, say, in South Jersey area towards the Philly side? Like, what property I should fix and flip, or what property I should buy and hold?
So help me understand a little bit better. Are you asking to understand based on that market what you think is best for properties, or
Yes, so let me clarify that. Like, if it is a 1% rent rule, like say if I'm in putting the cash on cash return, and then if it is the property satisfying the 1% rent rule. So if that is a good property, like say single family or condo or townhouse, and versus like fix and flip, like if I'm making like maybe within 4 months or 5 months, um, some upgrades or some basically property which I can make maybe 30,000, 40,000. So what is your avatar, like which I would say that which you decide, okay, I should keep this property as a long time hold, or oh, this is a good for fix and flip. So how do you decide that?
I think that's not up for somebody like myself to decide for you, right? Where I think you need to start is to understand where, like I was saying earlier, what your investment strategies are, what your investment goals are, right? Are
Mm-hmm.
you and again, you don't have to answer these questions, but these are the questions that I would tell you to answer for yourself to help you understand that, right? So number one, is my goal here to do I have enough liquidity to buy cash flowing properties and continue to buy cash flowing properties? If I buy this cash flow property and I'm not able to buy more, does it
Mm-hmm.
satisfy the cash flow that I need to receive, right? I think liquidity is a big part of this, right? Because you don't know when you're going to be able to cash out and pull that money out if you hold it as a whole property, right? So the first thing I think that you need to understand is first, how do I how much liquidity do I have and what are my goals? Am I looking to make cash so that I can go ahead and buy cash flow in the future? Or
Uh-huh.
am I looking for cash flow today? Right now, if your property has two exit strategies, you're
Right.
in a phenomenal situation, right? Because now, even in the situation that you cannot sell it for a profit as a flip, you always have that ability to still hold it, and it's not going to be a detriment to you or your finances, right? Now, in some scenarios, it may stop you from buying other properties, but at least you're not going to lose it. You're not going to be hurting from having it, right? So
Mm.
having two exit strategies, I love to hear that. I think that means that it's probably a great deal, and would love to talk to you about financing it with you. As far as the whether you should buy or sell it or hold it is something that I think is more that's going to be personal
Personal.
to you,
Mm-hmm.
and you got to decide how that makes sense to you.
I
Okay,
agree.
sound good. Sound good. So how do I reach out to you so that I can discuss with you? Do I need to schedule a call on your website, or?
Absolutely. What I'm going to do is I'm going to go ahead and put my information in the chat box right now for everybody. For anyone that wants to reach out, you could reach us at info@expresscapitalfinancing.com,
Okay.
or you could call us at 718-285-0806. And we would be happy to help you and talk through your investment deals and see how we could help you with the financing.
Okay, sound good.
Thank you, Rakesh, for joining. Appreciate you
Thank
and
you.
your question.
No problem. Thank you.
Are there any other questions? And also, both of us are on LinkedIn as well. And I should mention my last name is spelled Vigueire, but I am on LinkedIn if you wanted to connect me with me there, or Max Chera. Please find us on LinkedIn. We'd be happy to discuss real estate with you any day.
Paul, you said it's spelled the same way as you have it on your thing.
No, mine,
V-I-G.
it's actually not
Oh,
spelled correctly there. So
so let me
maybe
correct it in the chat box for you.
yeah,
So
please do. That'd be great.
V-I-G.
Uerie.
Sweet. So you got both of our LinkedIn profiles listed there for you to be able to connect with us.
I think this
Into
one's
the
for you,
US.
Max. What are your interest rates?
So I love that question. Interest rates right now, it kind of depends on the project that we're working on, right? So if you're doing we have so many different products for so many different types of investors. Everything is revolving around real estate. So we have our 1 to 4 unit fix and flip product, which starts at 10.5%. We have rental property mortgages, right? So you're 1 to 4 units, and even sometimes we could go up to 20 units on that same product. You're probably, I'm going to give you an average. I'm going to cut you straight and not what people are going to put as their lowest on their website, right? Because that's the base rate where you got to take the lowest leverage and things like that. I would say our high leverage deals are generally averaging about 8.25, 8.5. You have also multifamily bridge, which is slightly higher, 11% plus. But there's lots of different things. But again, sometimes just to make one thing super clear, by the way, Kimberly, a lot of the conversations that I have recently, people will start with that and go a certain way or another. Keep in mind, when it comes to financing, everything is a scale, right? If I put pressure on the rate, that means that I'm giving you a more aggressive product somewhere else. And if I put pressure on the qualifications, well, then maybe I'm getting you a better rate, right? Or maybe there's something else about it that's going to affect it, right? So I think where most people should start when looking at financing is understanding what it is that they need, how they qualify, what they can bring to the table, and then understanding, okay, well, what is the best product that I could get that will give me, again, rates are important. I'm not going to sit here and deny that, but understand first what product is going to fit you first, and then understand, okay, well, what rates are available for me in that product sector.
We have another question. One is for you, and then the second part is for me, Max. But what is the name of the self-management tool to add a work order in and receive contractor bids?
I'm happy you asked that. I don't have it in front of me. I will gladly bring that to the table for all of our followers. As you guys know, every time we bring on a affiliate partner, people that we know, we first like to vet them out, make sure that we know the product is good. I have not had that chance yet. Allow me to speak to them a little bit further. I just got back from that expo, but I would be glad to bring that to the table for you guys. So you'll hear from me soon about it. We'll probably set up a webinar to talk about that.
Right. And the second part I'll address, it said, what did you mean by underwriting rent? What I was actually just referring to is to make a determination or get your best estimate of what that specific property should be able to rent for on a monthly basis. And that's an important calculation that you may not be going in that direction, but you should still understand the cash flow potential for that property. And so that tool that I shared, Rent Range, produces a rental estimate, and it pulls in data from many different sources, and then has an algorithm for determining what the likelihood is of being able to achieve that particular rent by assigning a confidence score. And so a low confidence score means that there probably weren't a lot of comps, and it wasn't a lot of good quality information that went into making that determination. A high confidence score, you can lean into better and feel good that's in all likelihood what you would be able to rent your property for.
So Merlina, I hope I pronounced that right, has a question as well. I have a deal that has 30% seller financing. Do you provide loans for the 40% of the equity? That's a little bit of a tricky question because it depends on how you set up the seller financing. In short, if we are a second position, then we would not finance that property. You may need to find a lender that would do second position financing. Now, keep in mind when you do that, your second position financing rate's going to go up. So you might even deplete whatever that savings that you might be receiving is. But it depends on how you set it up. You can definitely reach out to us, and we would, be glad to talk you through it and see if you're in the best situation, or if we could potentially put you in a better situation. Well, guys, we greatly appreciate you all for being here and sitting with us and learning more about remote real estate investing. This has been a really fun webinar for myself. Paul, it's always a pleasure to have you here with us. You always
and a great series.
It's been a phenomenal series. I think we have to start setting up our next set of series and what we're gonna bring to the table. We definitely don't want to leave you guys hanging and not provide more information and value. We greatly appreciate every one of you guys for being here, and we're super grateful for you all. Thank you,
Yes,
Paul,
we're so
for
appreciative. Thank you all for joining. And if you've been with us through these, I guess, half a year or more at this point, thank you so much. We really appreciate you.
you guys are awesome. Thank you guys. Have a wonderful day, and we'll see you on the next one.
Bye-bye.